So let's have another quick look. So on the pound, on the euro yen, we may have a trend reversal. Let me show you that. We may have a trend reversal. The slow bias is turning from green to red, but we need to wait for a valid entry setup. This may be one. So let's move the MTM here. I can load my default setting. We can define default settings. False. Okay. You can see exactly the same panel. The stop loss is here. I hope I will succeed to catch it. Yes. Okay. Above, of course, and my entry level should be somewhere. So here and right here. If the price come back in this area, I will make an. You see here the price is almost there. Okay, now the price modifier. Okay, I click on the sell button now. The price has hit my entry price level. My stop loss was in place around 26 pips. Now I am in a trade on the euro yen, and you can see that the risk on that trade based on the stop loss size and the trade size is minus 0.96%, so just a little less than 1%. I have defined a risk of 1%, and now this will represent the result of the trade should I close the trade at any moment. So it represents the position value, the trade value with the present price. Okay, so I no longer need, oops, sorry, what is that? Okay, this is the line I want to move. So now we are in the trade, we have to pay attention to that trade, okay? And you will see that when the price will have moved by an amount equivalent to the spread is around 3 pips. So when the price will have moved by 3 pips, this number XXX profit will become first of all 0 and then green. Now that a trade is opened, let me show you in the terminal panel the trade size. You see, the trade has been opened with a size of 48 micro lots, a little larger than 4 mini lot on the euro yen, and so we consider this trade is made of 2 units. Units opened 2 units, and when I will have to make an exit, a momentum exit, I will close 1 unit, so half of that size. So remember, the trade size is 0.48. Okay. Let me have a quick look on the other pairs. So nothing. Okay, nothing interesting. Okay, the only interesting situation was the euro yen. And you can see on the chart, my stop loss was above the price, so it is a sell, and the button was a sell, so it is a short trade I'm showing here. Okay. Now we have to wait with patience for the price to develop. Now I can say in advance that this kind of short trade is a risky trade. Why? You see here we have the London Open with that vertical line, okay? And sometimes after the London Open, so a few bars after the London Open, so 1 hour and a half after the London Open, the price has initiated an uptrend. And the size of that trend is up to now 112 pips. We call such a trend a true trend. when we have such a true trend, let me check something else. When we have such a true trend, so in fact, the reversal or the exhaustion, not the reversal, the exhaustion of that trade will happen somewhere in this area around the Frankfurt and the London close. And this happens in 75% of the case. This means that in 25% of the case, the exhaustion of such a trend will happen either after the London close or before the London close. And sometimes the trend can simply continue. Now, an exhaustion of the trend does not necessarily mean a trend reversal, but very often it will be a pullback and then a concession zone or a range until the end of the day at 5 p.m. Eastern time. Okay. I have taken that trade because the price was making a rather good and steep angle, so the risk is present, but it's a trade which is worthwhile to be taken. And no, I have not a one-to-one reward to risk ratio. We never fix with the max a predefined reward to risk ratio. We try to take what the market wants to give us, because we are trend followers. Okay, we are trend followers, and if the market gives only us as a winning trade a half hour, so 0.5 to 1 profit, that's okay. But if it gives us a 10 hours, it's better. So, and in fact, if you consider that, when a trend initiates, you never know how far the price can go. So if you define if you predefine a reward to risk ratio, a potential reward to risk ratio where you will close your trades, it's some kind of way to force the market. And as trend followers, we don't force the market. We accept what the market gives us, because we have a winning rate which is large enough for that. With the max, we have around 70 to 75% winning rate in normal market conditions. Sometimes a little less when we have bad market conditions, and sometimes way higher when we have good market conditions. And the winning rate has a tendency to improve when we use higher time frames. Of course, we can trade with higher time frames, the 15-minute time frame, the 30-minute time frame. Many max traders use the 4-hour time frame or the daily, or some manufactured or offline time frame like the 8 or the 12-hour time frames. I'm going to show you here a nuance we have with the max. Now that the trade is open, we have to pay attention on how to close the trade. Okay, and for that we use exit criteria. We have several types of exit criteria. One of these types corresponds to the usage of some technical indicators. Another category of exit techniques are based on the pure price action, when the price presents or exhibits some specific patterns. We have what we call a hybrid type of exit techniques, combining some price pattern with specific indicators. For example, the specific price pattern with the Bollinger Bands here. So we have several of them. The TP, the movement invalidation, the sideways, and so on. And then we have some exit technique based on time constraint. So we have several of them. Each exit technique, especially those based on the usage of technical indicators, have not the aim to predict what the market will do. Because in fact, we cannot predict what the market is doing with an indicator. An indicator like the STO RSI, which is a momentum indicator, is a short-term indicator. Let's come back to the pound yen, because we may have possibly a trend appearing. So an indicator is always a short-term indicator mirroring what the price is doing. And so especially with the STO RSI, when the price makes a low, the STO RSI makes a low. When the price makes a top, the STO RSI makes a top. And sometimes the indicator can lag. It can be coincident. It can sometimes lead the price, but either way, you can never use an indicator to predict what the market will do. For example, here, now we can see that the stock RSI is bottoming. If the price pulls back, we will have a bottom in the price. We will have also a bottom in the stock RSI. This does not mean that the pullback will continue further. It does not necessarily correspond to a trend reversal. So we cannot predict what the price will do. The price can at any moment go either way or sideways. Okay. However, now that we are in a short trade, consider that point. We are in a short trade. What is the risk for this trade? The risk is for the price to go against the trade. So to make a pullback, we never know the depth of the pullback. It may be a small pullback, it may be a large pullback, it may be an uptrend resumption, okay? Because we can never predict what the price will exactly do, we have to consider to manage the trade in another way. And the way we manage the trade is on the risk point of view. When is the risk large enough for our trade to force us to take a decision to reduce that risk? And in fact, the exit techniques we are using, even those based on indicator, will help us to define when the risk becomes too important to force us considering reducing that risk, either minimizing the potential loss we may have on the trade or banking some profit, okay? And you can see here the price suddenly has reversed to the downside. The price is coming back in the direction of the trade. For the moment, but this is not a guarantee, the trade will be closed with a profit, okay? How many pips are you away from the stop? We have rules to place the stop loss on our chart based on what we are seeing on the chart, plus a criteria based on the size of the stop loss. I will not explain the rule because this is taught in the max courses, but once we have placed the stop loss on the chart, we have to check also that the stop loss is large enough. And when we trade with the max ETF, so when we trade using these ETF lines and the companion indicator, we want to have a stop loss size in the 5-minute time frame, which is 12 to 15 pips minimum. So 12 to 15 pips depending on the volatility of the pair. So in this case, the euro-yen, it's a rather volatile pair, so the minimum stop loss size will be 15 pips or more, of course. Okay. You can see that the price is moving in favor of the price. The price has moved by approximately 9 pips. The total pips, the pips opened here represent the total pips by the 2 units. So the price has moved by around, we can see here, 13 pips minus the spread. And so if we subtract here 3 pips, we have 12 pips twice, so 24 pips for the 2 units. And we have rules also to adjust the stop loss along the trade when the price moves in our favor, or as long as the price is moving. And some other lines on the chart helping us to adjust the stop loss is moving in our favor, we adjust the stop loss. I hope to be able to show you that. So the trade risk aspect is the first priority we attach importance. So we want always, as the first priority as a max trader, to progressively minimize the risk of the trade until we are able to cancel that risk. Okay? You can see in this panel that if I close the trade now, the profit is 0.38%, almost 0.4%. Okay? But as long as I don't get an exit technique, I stay in the trade. So my stop loss was about 26 pips, plus the spread, 3 pips, so 29 pips. 29 pips, 29 pips one nuance we have in the max is, and this is what I call a discretionary decision. I'm going to place that horizontal line. I will explain just in a moment. So let me check again. Okay. So when we have to consider to close one unit, so to make an MX means closing one unit or a momentum exit, we have two alternative approaches we can use. The first approach is as soon as an exit technique triggers and the price reaches the desired price level for that exit, either with a profit or with a loss, we close one unit. The second alternative we have is, and this is what I call a discretionary situation, and I will explain what a discretionary situation is. This discretionary situation is, I will make my MX only if I am profitable and only if I am able to close one unit at or below that level, that line I have drawn on my chart. Okay, we have criteria to define where to place that line. Now, what is a discretionary situation? A discretionary situation is a situation when we can be more flexible with our exit techniques. This does not mean we can be subjective. The decision, the flexibility is always based on the trade risk management. The concept behind that idea is we can sometimes delay our exit by accepting an additional risk for our trade if the potential for the trade, should the trade go in our favor, is greater than the additional risk. We never know in advance, in fact. But when the price is engaged in a trend, this works very, very, very often. And so such a discretionary situation is, and there are a lot of them while the price is unfolding a trend. So globally, on the long-term perspective, will increase the profitability of the trades. But it is always based on the trade risk management. It must correspond to a small acceptable marginal risk. So for the moment, I don't have an exit technique triggering yet. So we have to wait for the next candle to close. And these discretionary situations are sometimes complex to handle because they require a lot of strength in the psychology of the trader. So what we advise to our max traders is when they see an exit technique, they apply it, of course, whatever the result, because if the trade should be a losing trade, this will help to minimize the loss. And then when they become more comfortable with their trade, they can consider to use these discretionary situations. So, Rodolfo, you get a bit nervous. Yeah. No need to get nervous. You know, it's never a trade which makes a good system or which makes a good trader. And in the past, I was showing my track record. I no longer show it because for two reasons. The first reason is people are asking for track record. But when we show a track record, they have always the pretext, oh, your track record may be a fake one. Indeed, in reality, it's not difficult to produce a fake track record. Okay? I don't care for this pretext. The second reason why I no longer show my track record is I live in Europe, in France and in Belgium. In the Eurozone, we have extremely important constraints about trading. For a trader who wants to call trades in a trading room, to call live trades, okay, he must be licensed for that. To get the license, it's a very difficult process and it takes years to obtain that license. And so, yes, I am a trader, Ang. I am a private trader. And if you are not licensed, and you call live trades, this is forbidden. This is forbidden. And believe me, in 2008 or in 2009, I have shown some of my track record, a portion of my track record. I have had problems with my administration, with my fiscal administration. They have interpreted that as me advising or calling live trades. And it has been a nightmare. I do not want to live again these kind of problems. And so I no longer show my track record. I prefer to illustrate the process we use in the MAX in live conditions, but no, I will not show my track record. I don't have the right, simply, and I do not want to live again the nightmare with the administration. And I'm too aged now to engage myself in the process of getting the license to call trade. It takes several years. There are two big criteria to be licensed. Either you need to have a big experience in a bank as a trader in a bank, in the trading room of a bank, or with what is called in Europe here, how it is called, what is the translation? A wealth manager, okay? A wealth manager. Oh, it's called a license, simply. And by the way, a track record is not the track record is not how could I explain that? The track record does not describe how good a trading system is. The track record is always personal to the trader. The track record shows how the trader is good with the trading system he's using. You can have two traders using the same track record, the same trading system, but having different results. Even if they trade the same pairs, even if they trade the same time frame, because they have different risk they consider or they perceive on the trade. Okay? The MT4 shows the trade you have executed on that platform. If you trade several platforms with several traders, personally I work with 3 brokers and 3 different platforms. Three different platforms. So the track record is the combination of the 3. Okay. Robert, no problem. You see, for the moment, the price is moving in favor of the trade. No signs of exit technique. Yeah, and as one says in the room, I make more money trading than I could ever make running a trade room. If I want to run a trade room, I need to relocate in a country where we have no such regulations. In Switzerland, for example, or in some fiscal haven. We have some fiscal haven in Europe, but I like to live in France. So I'm Belgian, but I like France. No, I don't move break even yet. It's too early. Too early. Just in case. Why? Why to feel fears in a trade? Once a trade is open, you have either you have 2 possibilities, either a profit or a loss. I know that the winning rate we have with the MAX is around 75%, around 15 to 20% losing trade. Okay, so I don't need to rush to adjust my stop loss. Based on what I see on the chat, it's not time for me yet to adjust the stop loss. Perhaps in 2 minutes and 40 seconds, when this candle will close, we will see. When time will be there, I will adjust the stop loss. But I follow my rule with patience and discipline. Okay. No, I have not said, Hank, I cannot run a trading room in the European zone. I cannot call live trades. Okay, I cannot call live trades without a license. It's not the same thing. So indeed, no live trading room, indeed. And personally, I do not want to spend hours in a trading room with a demo account. Because if I spend several days of the week with a demo account, I waste my time not trading live myself. I trade around 2 or 3 days per week. Okay. I don't understand what you mean, Rodolfo. I don't understand what you mean. Can you be more explicit with your comment? Yeah, indeed, trading with a demo account is not trading because we are not making money. Now, I can give you some general informations about my own trading process. So I trade 2 or 3 days per week on average. Okay. The best days, Craig, are the days when we have news releases, when we have movements, or when I have explained the 3 main factors, driving factors that move the market. Okay, and so when we have these factors changing, which explain the movement or the trend reversal in the market, these are days which are interesting. And so typically all the days of the week are good to trade. It's not true that some days are less appropriate to trade. If you observe some statistical fact, you will see that all days are good to trade. But I trade only when I estimate there is a reason to trade. Okay? So when I'm sure the big boys will be implied in the market. And so this means 2 or 3 times per week. And of course, I have some objectives in my results. I have some objectives, and I have a weekly and I have a monthly. Oh, okay. Now I can adjust my stop loss. You see, this line has dropped, and I will adjust my stop loss based on that line. Now, observe the effect of adjusting the stop loss with the ESL result. Adjusting the stop loss will not affect, obviously, the XXX profit. Okay, it will affect the ESL result. It's minus 0.96%, representing minus 1R. I will adjust my stop loss. Let me draw a line on the present candle. That way, I will adjust my stop loss right on this place here. Okay, and now you can see that the risk on the trade, on this trade now, is minus 0.62%. I have reduced the risk by 1/3. Okay, and I'm still in the trade with my 2 units. I don't set my stop loss break even because the stop loss would be too tight for me. I like to leave. It is not that I like the rules we have with the max tell us to leave enough room for the price to move, because the price, while making a trend, an uptrend or a downtrend, will make pullbacks. Okay. And if this candle closes as a blue candle, I hope it will not close above that level here. We will have an exit rule triggering based on our Stochastic RSI technique. Let me check, this is the Euro Yen. Let me check on another platform. I have my complete template. Okay, no special things. We may have possibly a short setup developing in the pound Aussie, but the price is engaged into concentration zone mode. So the max trader know what that means. This means that they have to draw the support level and wait for the breakout of that support level. So 2 minutes and a half before checking if this candle will trigger an exit rule. Yeah, Robert, I have adjusted the stop loss, as you can see, okay? Yeah, the version of the MAX I'm using here is what we call the MAX ETF Primer or light version. It's not the entire standard version with all the entry techniques, the exit techniques, and mainly the scaling technique. Because with the MAX standard, we have the scaling technique. This means that when we have a trend unfolding, depending on some specific criteria, we can add to the trade to progressively build a larger position. And when we build a larger position along a trend, this generates very often a way larger profit. What we like also to do is to mark our chart when we open the trade. For example, here, this was the entry setup for going short. We like to mark it with a green vertical line. And when we will have an exit setup bar, I will use this magenta dashed line. We like to mark the chart in specific ways because what I do personally in my journaling process, I keep track, I make a screenshot of the chart to keep track of my trade in such a way that during the weekend, I can make a post review of my trade to check if I have followed the rule correctly. A good trade for me is a trade which follows the rule, which strictly follows the rules. Okay, either a winning trade or a losing trade. The fact that a trade is profitable or not doesn't mean it is a good or a bad trade. A good trade is a trade following the rules. If I have made some errors in my trade, and sometimes this happens because I may be distracted because the price sometimes goes very fast and I have no time to take the necessary action or decision, so I make errors, I consider that as a bad trade, okay? So in a few seconds, this candle will close. Let's see if it will trigger an exit setup. Let me check. No, we don't have the exit setup yet, not yet. But I can tighten a little bit my stop loss, and you will see how this will reduce the risk. So here, that way. So at minus 0.56, I have almost reduced the risk by half. And then we wait for the next candle until we will get an exit setup bar. Robert is asking a good question. So emotionally, why do I want to jump out of a trade just because there is a profit and a blue candle? Yeah, indeed. In fact, as long as, once a trade is open, as long as the price moves in the direction of the trade, in this case in the direction of the trend, so we see the XXX profit increasing, okay? But when the price retraces, like with this blue candle, of course, the profit, which is always a floating profit or a potential profit, the profit is made only when the trade is closed. This profit with a blue candle in a short trade decreases. And many traders begin to panic when the price makes a pullback. Because they say, okay, I could have made a profit of 0.8%. Now with that pullback, I'm only at 0.6%. So let's save as much as possible. So the trader who behaves that way will never exploit trends. A trend is made of push, pullback, push, pullback, push, pullback, push, pullback. And at some point, we never know exactly when, one pullback will correspond to the end of the trend. But it's rarely the first pullback. Sometimes it happens, of course, but it's rarely the first pullback. And so here we are in a pullback. That pullback will give me possibly an exit setup. We have to wait for this candle to close now to see if this bar will be an exit setup. Perhaps yes, perhaps not. It depends. So we have still plenty of time. But we need to be patient and disciplined. If you want to exploit a trend, you need to develop the courage to stay in the trade as long as possible. So of course, you can decide, possibly, if you are using other concepts, because there are good ideas everywhere. If your price reaches some levels giving you a predefined reward to risk ratio, yeah, you can close the trade. Why not? But that way you will never exploit, you will never give you the possibility to exploit a trend if the trend unfolds. Now, of course, should this candle, before it closes, reaches my level here, okay? Because I have said, if you remember, that this movement is a more risky movement, I still see potential for this uptrend to resume until we are in that time window area. So this short trade for me is a bit risky. When we are in a risky trade, we can be faster in banking some profits. And by the way, for those of you who trade with the max standard, you know that this area, approximately this area, would have been an MX area with what we call a rejection, an area rejection, okay? But I cannot use that technique in this light or primer version. So I suppose that you have made that. You have tried the 1 minute. Ah, okay, fine. The 1 minute, that's nice. So this candle will close in 11th second, and it will be most probably an exit setup bar. If it closes as a blue candle, no, it has, yeah, it is an exit setup bar because we have the conditions for an exit setup, and my exit level will be, if the price follow through, will be at this level here. Let me set where am I here? At this level. So at this level I will make my MX. And in the meantime, I can further tighten my stop loss that way. And you can see that now my risk is less than 1/3 of 1%. Okay? No, Rodolfo, I mean a mid-TT rejection. If you observe the euro-yen, the price was between the home base and the first gray TT line, and in fact this bottom, we are now here at the mid-TT level, and so we had a rejection of this mid-TT level here, okay? Now, of course, if the price continues to go downward here, so the exit rule has not triggered, okay? Sorry, the exit setup has triggered. This candle was an exit setup bar. In order to make an exit, we have several steps. We have, first of all, to pinpoint an exit setup bar. Once the exit setup bar, whatever the technique we use for the exit, is triggered, we define where to make the exit. Okay? And if the price reaches that exit, this means, it doesn't mean that the price will reverse. It simply means that the price now is at risk, or the trade is at risk, and we have to minimize that risk. The price has not shown that risk for the moment because that level, which was my MX level, has not been achieved by the price. Okay? So I simply keep my 2 units, I stay in the trade, and I wait for the next exit setup. We can observe on the chart that we have here the confluence between this max price level and our long-term moving average. It corresponds approximately to a 200 exponential moving average, and we have a nice confluence. So this area may be possibly, we cannot say for sure, but it may be possibly an area of resistance. Okay. Okay, Robert, nice. No problem. You need to develop patience, in fact. Okay. And if you remember, Robert, I don't remember if you have participated to the Max Mini course I have given Monday, where I have shown that even with small risk and small realized reward to risk ratio, we can still generate nice revenue with the Max, simply based on that concept of money management I have explained in this mini course. It will be interesting to see how the price will react at this level. Yeah, I'm just showing that we have to follow the rules and have not face face as a religious connotation, and so it's out of question to consider a religious aspect here, but confidence. Okay, have confidence. The confidence must be built on 3 levels. Confidence in the market. In order to trade, of course, you need to have enough opportunities to catch and to trade. These opportunities are based on the movement you want to trade. With the Max, we define the kind of movement we want to trade. For example, we want to trade what I call momentum directional movement, so given by our bias indicator. And so these are the trends we want to trade. So rather large movement. And so if you scroll through charts for years and years and years on all the pairs, on all the time frames, you will see that the market provides more opportunities than we can even consider to trade. Okay? Then you have to develop confidence in the trading system you are using. Let me check if we don't have an exit rule. This is not a long bar. The long bar is one of our exit technique. A long bar is a bar having a length twice or more the average length of the previous bars defining the movement preceding the candle. So it is not the case, so we don't have an exit technique here. So we need to have confidence in the trading system we are using. And this requires practice, okay, a lot of practice. You need also to understand how or when the price will make movement. Unfortunately, for many pairs, most of the movement happened during the European session. And that's understandable. With the London Open, up to the mid-London session, we have an overlap with the second half of the Asian session. So we have a lot of Asian and European traders trading at that moment. And then with the second half of the European session, we have the European traders, but also the US traders. We have an overlap between the second half of the European session with the first half of the US session. And so this explains why the European session is, during the day for intraday trading, the best session to trade most of the time. Of course, there are always exceptions when we have some news release. For example, if you have a news release on the Aussie or on the yen or on the Kiwi with a big surprise during the beginning of the Asian session, you may have nice trend developing during the first half of the Asian session. Okay, if you have important news release during the second half of the US session, you will have nice movement developing during the second half of the US session. So you need to understand also what are the factors driving the market. Okay, let me check here. We may have a rejection here. let me define an exit level for the home base channel rejection, and I will be very very aggressive here in the exit. I will make an MX if the price reaches that level, so of 0.103. And look how the risk will evolve. So for the max trader, the TT rejection, when it corresponds to the home base, you can consider the entire channel. Okay, so the price seems to reject, perhaps to reject here the upper band of the home base channel. So you need to understand when the action is present in the market, and so when the big boys are implied in the market, and these are the best movement to trade. This is why the global context for me is the most important aspect in trading. The technical aspect, so the indicators and so on, the nice lines we see on the chart are the less important. They simply help us to quickly pinpoint interesting situations. Interesting situations are potential trade opportunities or potential exits. Okay. So there are other setups developing. I see on several other bound pairs, but I will focus only because we will wrap up this session in around 45 minutes. I will focus only on this yen pair. Okay. To illustrate the process, one pair is enough. So the price has not hit my level here for one pipette. The high has been at 0.102. So for one pipette, the price has not hit my level. And so you have to build your confidence into the market, in the ability of the market to generate the movements you want to trade. You have to define the movement you want to trade. You have to develop the confidence into the trading system you are using by practicing, first of all, by learning all the rules, all the concepts of the trading system, and then you have to develop confidence in yourself. And never forget one thing, it's never one trade which makes the trader or which makes the trading system. So we may have another rejection here, and I will adjust my exit at here 6-1. Okay, I'm making an MX here. And now you can see that by making my MX, of course, this was my exit level. The execution has been made here on the ask price. Why? Because the MetaTrader platform always shows the bid price. So I have closed one unit. That one unit has been closed with 33 pips profit. And now my risk, because I have reduced my trade size, let me show you on the terminal panel, view terminal panel. You remember 0.48 was the size of the trade, and now the size has been reduced to 0.24, so half of the size. If I look at the account history, you can see that the trade has been closed for half of the size, and you see the profit here. Okay, and you see 60.59 euros corresponding to, if I round off to 61, so 0.61%. I am left with one opened unit, and so I will close that second opened unit on the next exit technique or at the trend reversal. We have two ways to close that second unit, either on the next exit technique or on the trend reversal. Okay, I no longer need that horizontal line. I can tighten a little further my stop loss. You see now the result on the ESL, should the price reverse quickly and hit my stop loss here, I still guarantee almost 0.5% profit. Thanks to the unit I have closed with a nice profit. So the profit has been closed here with a 70 close profit here, 0.61% profit on that unit. Okay, but I can tighten a little further my stop loss, now increasing the minimum profit I can have on this trade. And so let me tighten. You see 0.47. If I tighten the stop loss just a little bit, I lock now 0.5%. Now the price is facing that horizontal max price level with a confluence of the home base, and so let's see if the price will succeed to cross this level and continue the trade. Yeah, Rodolfo, you can see here one of the way to use the mini course was the following. You remember the stop loss was around 26 pips approximately, or 29 pips. Okay, it was 29 pips. The spreadsheet we can use, if it shows, for example, that the minimum reward to risk ratio you have to achieve for the next trade is 1:1, for example, we have a potential movement up to the home base or that max price level of 41 pips. So this represents 1.3 times our stop loss size. So this represents 1.3 Rs. And if the minimum reward to risk ratio was 1 R, this is a trade we can take. The potential reward to risk ratio is large enough. Okay. So what you see on the chart gives you an idea of potential reward to risk ratio you can achieve, and if that potential reward to risk ratio is not enough based on what the spreadsheet tell you, simply skip that trade. Okay, and this is what I mean as being very picky in the trade. Being picky in the trade consists in choosing the pairs which have a chance to move based on what is happening all around the world and in the market, and if your trade in terms of risk aspect has enough potential. But we do not want to limit the reward to risk ratio, the realized reward to risk ratio. We want to be able to catch more profits, okay, if the price exceeds some levels of resistance to the underlying movement. But it gives you an idea if your trade is worthwhile or not, okay? And you can see, by the way, that now I am almost break-even with my second unit. The risk on my second unit is only, as you can see, 3.5 pips, so 3.7 pips, so well covered by the profit I have made on the first unit. And with that candle closing, I can tighten further my stop loss. So in the following way, I will draw another vertical line here, because I want to be sure where I adjust my stop loss. I want to stay above that red line. I can tighten further my stop loss, and now I am also making a profit on the opened unit. I'm looking 0.11%, so 0.1% profit on my second unit. This means that now the minimum profit I have locked on this trade is 0.72%, almost 0.75%. Okay. And so you think that the price has crossed that level, so now we still have nice potential for the price to go downward. Now, along that movement, of course, for the traders, the max traders who are using the max advanced, or the max standard, or the max advanced level, or even the max sum, the max ETF sum, along that movement, there is possibility to add, so to make scalings, to add to the trade and to further increase the profitability of the trade. So this candle will close in 3 minutes, a little less than 3 minutes. I always check the nature of the candle, because one of our exit rules is based on some pattern the price may exhibit. and one of them involves several bars we call reversal bars. A reversal bar is, for example, such a candle here, which we call a pin bar. Another one is, for example, let me see, such one we call a doji-like bar. So we have several potential reversal bar, and when they form a specific pattern, so we have an exit technique. And so once the setup bar is pinpointed, we define an exit level. And so it's possible that this will be one of these reversal bars, but it's not enough to define the pattern I'm looking for. However, it can be a setup bar with our indicator here, because now this indicator is making a bottom, even a divergence. We like the divergence in the Stochastic RSI. And one of the questions we are often asked is, why do you use so many exit techniques? The problem is not to use many exit techniques. We use several kinds of exit techniques, several types of exit techniques, because here you are seeing an example of the problem sometimes using indicators may have. If the Stochastic RSI here forms a bottom here, at the close of this candle, we will have this candle as an exit setup bar. Okay? Now the problem is, because we have to wait for the candle to close, we never know how far it will close, and it can close far away against us. And this is a problem we have with exit techniques based only on indicators. This is why we have also other exit techniques helping us to overcome most of these types of problems. Not all of them, of course, because no system is perfect, but many of them. The aim is to be as accurate as possible whenever we can, in the way to pinpoint a risk on the trade. Okay, this blue candle is indeed an exit setup bar, and now I have to define where to make my exit. My exit will be made here at this level, and I will even set my level a little bit higher, the max price level. So if the price comes back and hit that level, I will make my MX. In the meantime, I can further tighten my stop loss, locking more and more profit. Now I'm not too far from a 1% profit. Robert says, your max seems to be fantastic at limiting the risk, hence there seems to be a lot of exit. Yeah, there are in fact a lot of exit setup bar. But remember what I have explained in the way we execute the exit. We have to pinpoint, first of all, an exit setup bar with all the exit techniques we have. We have around 20 exit technique. And once we have pinpointed an exit setup bar, we have to define where to execute the exits. Okay? If the price does not hit that limit, that level for the exit, we ignore the exit setup and we wait for the next one. And so this is a way, in fact, to overcome some of the difficulties many traders have with indicators. Indicators are not predictive, and it's not because the Stochastic RSI makes, for example, a bottom or a divergence in a short trade that we have to close the trade. That's not true. Closing the trade, even partially, must always be based not on an indicator, not on an exit technique, but based on the risk the trade as at the moment an exit setup appears. An exit technique is simply there to help us pinpointing when the risk for the trade is becoming important enough. So it's a way to quantify the risk, and then when that risk becomes important enough, we have to reduce that risk. Okay? This is the philosophy behind the risk management we have with the trade. So an indicator or any of the exit routes we have is not an automatic exit. And so in that concept, with that point of view, in fact, you can understand that the number of indicators you may use on your chart, when they are good indicators, of course, is not a limitation. You can use as many indicators or as many tools as you want on your chart. Now, of course, I can understand that some traders prefer to trade with naked chart. If they understand some concept like order flow, or simply some specific price pattern or price behavior the price is exhibiting, that's fine. It's also a good trading system. Okay. Personally, I am a past software engineer, so with a big physics and mathematics background. I like to try to quantify things with tools, and so this is why I like trading with the MAX and the indicators the MAX is using, but keeping in mind that these indicators are not predictive. Okay. Okay, this candle will close in 30 seconds. The price has not hit our level. It seems that even the price is resuming the down movement. But here, if this candle closes as a red candle, this will give us the opportunity, most probably, we will have to see, to improve our exit level, because we are in a specific situation we call a ratchet situation. The MAX traders know what I mean. Okay, we are here at the close of this candle, and so the exit condition still hold, and we have what we call a ratchet condition helping me to further improve here my exit level. So let me check. Yes, I improve my exit level by just a few pips, so 2 pips. 2 pips is 2 pips, and I can tighten further my stop loss here, locking more profit. The exit level is still holding, so I have to pay attention. If the price follow through and hit my level here, I will have to close my trade. Or the alternative will be to wait for the trend to reverse. Personally, I prefer to make my exit whenever an exit setup appears and the price hit my exit level, because this gives me opportunity to open more trades if the trends holds. So 992. We can check also here 992, 0.992. Okay, XXX. So here the trade is closed. So the price has hit my exit level. So no remorse, no regret, no hope. The price has hit my exit level. I close my trade, and you can see that this trade has been closed with a profit of 1.39%. This represents a reward to risk ratio, a realized reward to risk ratio of 1.39. So 1.39 times my initial risk, which was a little more than 1.39, because my initial risk was a little less than 1%. And we can view in the terminal panel here that the trades are closed, and you see the balance has increased from 10,000 to 10,138.99%. So the profit is 1%.3899. So rounded off to 1.39%. Okay. If we look at the account history, you can see how the two units have been closed along that trade. Okay. Okay. And I thank you very much for your participation, for your questions, for your comment, for your kind words. And so I wish you, if we don't see you next Saturday, I wish you a happy Easter. And so see you next time. Bye everyone, and take care in the meantime.